Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Sara Mehle, Senior Index Research Strategist with Nasdaq Investment Intelligence, as well as Max Cabasso, Managing Director on Nasdaq's Market Intelligence Desk. We're here to take a look at the Nasdaq-100 and some other key areas in the market that are making moves. It is great to see the both of you, as always. Sara, welcome back to New York City, and it really has been an interesting couple of weeks in the market with the movement that we're seeing. In terms of the technicals that you look at, what's it suggesting about the Nasdaq-100?
So we experienced the second 5% pullback from a relative high this year in the Nasdaq-100. The point and figure chart, as we discussed last week, moved to a point and figure sell signal for the first time since earlier this year. We actually saw the chart reverse back up into X's since the last time that we talked, so there still is that support there at 19,500. This, I think, is a good sign because we didn't see further downside. We were able to see an uptick in demand there, causing that reversal back up. And from here, the chart would return to a buy signal at 20,800 or above. So watching that, we were pretty heavily overbought just a few weeks ago, about 104% overbought based on the 10-week trading band, and now that's normalized to about 25% overbought. So while these pullbacks don't necessarily feel good, I think that it can still technically be looked at as a normal move.
Right. I mean, Max, the thing is, too, when we saw some of that rotation go back into tech this week, it wasn't if other sectors were having money come out of that either. So it seems like it was pretty broad-based.
Yeah, it wasn't just that kind of reflex of, all right, we're getting back in. It was a quick sell-off, we're piling back in, get out of the small caps, which saw that reversal, start to close the gap. Those didn't really sell off when we started to see kind of stabilization, and especially in the large caps. Again, it feels better, but we're in that kind of show me state now where we got earnings kicking off. Positioning is still very long, pretty stretched, so we're in that kind of wait and see. Again, we're really starting to kick off earnings in the next week or two, so I think that'll be a big pivot point here. But again, it was a positive sign to see some of the flows that went into the small caps. It wasn't just an immediate short term, all right, we'll trade this and then get right back out. They've kind of held up, and so again, the large cap, mega caps returning to the prominence hasn't been at the cost of the other so far.
So let's pull up a chart of the Nasdaq-100 here and take a look at some other technical indicators to see if that aligns with what Sara's seeing on the point and figure chart, or
yeah, so we're sitting here still above the 50-day. We almost gave it a touch there, end of the last week. But again, like Sara talked about, we held there at that kind of 19.5 level. We're basically back to where we were, end of June, before we saw that rally in the first part of July. So again, kind of back to where we were. We gave back that 5%. The numbers are pretty staggering though when you look at it, kind of where we were again at this time last year, where you're below 16,000, and now we're still pushing 20,000. So again, those small 5% pullback, that's really not much. Again, still holding all these kind of factors. We didn't dip below those June lows, which potentially in my mind would have signaled kind of a further weakening. But again, we'll see how we hold up in the next week or two with earnings. But right now we're in a decent position here. If the rally continues, we could clearly see new highs again pretty quick after.
It just feels like there's so much has happened in the market over the past couple of weeks for a number of reasons. So not only are you thinking about earnings, it feels as if the market could be on every single metric, but if your guidance isn't super strong, that's where the challenge is going to come in.
Sure.
I mean, we saw that happen with Micron, but in addition, now that there's some sort of a path forward with the election, now you have to start thinking policy as well.
Yeah, I mean, you're starting to see with the semis, which
Right.
have been flying their leaders. You're starting to see a lot more of the headlines about headwinds from geopolitics, whether it's tariffs on China, if there's going to be an export ban with some of the chips there. That's obviously potentially a large driver for those names. And you're interested to see how many companies mention it in their earnings prints in the weeks ahead. How many of them are starting to focus on that? All right, it's not inventory backfill or kind of what they've had to deal with. They're kind of at a level set. Now it's, all right, now where are we going from here? We've had a ton of hype with the AI cycle, obviously, but where are we going now? If the election goes the way certain people think, does that really impact trade, and is that going to hurt anybody that's really exposed offshore?
Well, it's so interesting, Sara, when you listen to these earnings calls, everything was AI. So there's always like this buzzword that you see that evolves from these, from the earnings conference calls. So I'll be curious to see if policy and geopolitics comes up more. But when you look at the other indexes within Nasdaq's suite of indexes, are there any trends you can discern from there?
Well, just diving in more into the Nasdaq-100, what I did notice just on a month-to-date basis, we've really seen strength in discretionary and healthcare from a broader perspective, broader industry perspective, and then diving deeper into their automobiles and parts driven by Tesla. It's one of the top contributing names. And I just really thought the divergence between hardware and software has been pretty interesting. I think CrowdStrike incident last week, is a name that we can all is becoming more familiar, but that has about a 0.56% weighting, so it only has pulled the index down about 18 bips, but other names like Meta and Microsoft have been pulled back there with them as well. But yeah, I think the divergence between hardware and software, particularly in tech, is notable right now.
Which is interesting because I think sometimes when you refer to the Nasdaq-100, intuition tells you it's all about tech, right? But there really is a diversification of sectors that are in there, which is why we didn't see the index react as poorly as you might have perhaps expected, because money was going to other sectors with these larger companies that do have a weighting and a presence in the index.
Right, those discretionary names we've talked about, names like, Tesla, Warner Media, Costco is another one that we've talked about.
Yeah.
And then the healthcare names, Amgen, Vertex, a notable allocation as well to, we have industrials in there, we have staples. So it's definitely, as you mentioned, not a pure tech index.
Right. So let's take a look at the dollar here for a moment, Max, because of course that is going to have, certainly there will be an impact made on that depending on how this goes over the next few months.
Yeah, we're kind of sitting in this holding period here really for this entire year. We've been bumping up kind of this 105, 106 level, touching as low as 100 on the DXY. I suspect we're going to start to see a lot bigger moves here as the election really starts to come into focus. Like we talked about, a few months ago, the election stuff really isn't going to start until probably after the summer. My guess is at the end of earnings season where that'll be the big focus. I would expect to start to see a bit more volatility in the dollar and just currencies across the board. Because again, depending on which way the election goes, there could be drastic differences in policy, and especially with trade. So again, as polls get a bit clearer, now obviously now we have an idea of who's going to be the Democratic nominee. There's going to be a lot more focus on the substance of policies. So again, we've really been pretty sanguine here in currency world. Obviously there was the bit with with JPY earlier in the year where it was getting a little crazy there. But again, we've been kind of flat here, but I would expect volatility to definitely pick up in currency world. Because again, policy is going to really come into focus. We kind of are expecting, we know what's going to happen now with the Fed. We expect, obviously there could be a couple curveballs, but you're basically priced in 100% cut for September. And there's a greater than 50% chance for November, and then another almost 90% chance for December. So you have at least two cuts kind of priced in. That's kind of off the table of a real concern. So again, the political headwinds or rhetoric is really good.
Well, it's interesting when you think the Nasdaq-100, assuming that Vice President Harris does get the nomination for the Democrat ticket, she's being perceived as tech-friendly. She understands that landscape, right?
Yeah, I mean, definitely. Tech's going to be a big one, obviously with M&A activity as well. Obviously, FTC's kind of been sitting on M&A a bit, and kind of that realm coming from California, well-versed there. Interested to see with Vice President candidate Vance on the Republican ticket, coming from where he's coming from, but some of the political allies that he might have in the tech world as well. I think we might see a bit of a boost of tech kind of either way, but there's going to be a change in the landscape either way, no matter who wins in November.
And I have a feeling that there might be some surprises too. What we expect might happen might not necessarily be the way it plays out. One last thing I want to take a look at, Bitcoin, right? So we just have the ETFs that are now trading. We have Bitcoin Nashville taking place this week. And for the first time, Bitcoin really is within the national vernacular because it is a voting issue at this point.
Yeah, it's definitely a voting issue. You're starting to see a lot more substance behind it, and a voting bloc starting to kind of come together that this is their one issue where they really care about. So we're starting to see more. I mean, we saw a ton of inflows, I think it was yesterday, in some of the ETFs for Bitcoin. Obviously, Ether ETFs just officially launched today. We had a really nice rally here. We fell below 200, but quickly regained it. Not the best looking though, still have a bit lower lows and lower highs. We'll see if we can kind of break out here. But again, it's not going away, and it will be something, again, to watch. We were talking about DXY. this is going to be involved in there as well, depending on kind of where the polls are going. I expect to see a bit of a reaction in Bitcoin. Just again, like you said, there's a voting block that's coming together where this is a single issue that people are concerned about, that they want to have regulation on and be a part of the conversation now. It's not just kind of this niche, market over on the side where, going to gamble and trade and, go there quickly, but it's turning into something real here.
I mean, from a technical perspective, though, it's trending.
Where again, regaining the 200-day, I think was important. I was kind of expecting a pullback more towards the $50,000 level, but it was really a 2-week period here, and we quickly regained it back up through the 50 and 100-day as well. Stalled out a bit today, but again, that regaining the 200 so quickly was pretty important, because otherwise you're probably looking at a move down to 50,000. After we saw that move at the end of last year, 2023, or beginning of 24, where we really started to take off again. So hopeful to kind of get back to that 70,000 level and get through some of those previous highs, because again, we have had a bit of lower highs since the original high in March, and lower lows as well. But again, that 200-day reclaiming was a big one.
Yeah, and finally, Sara, to wrap up here, when you take a look at some of the tech indexes, is it trending relatively the same to the Nasdaq-100?
Yeah, I think we've seen strength in our climate tech index. We've seen strength in some of our different thematics. But yeah, I think so far on a month-to-date basis, we've seen some strength in like global digital payments, our wallet index. There's been some very, very interesting things that have come about, especially strength in financials and industrials the last few weeks. But yeah, I think not everything is moving the same, but generally speaking, in terms of at least the Nasdaq-100, a nice, as I mentioned, 5% pullback. I did want to mention we actually had 3 of them last year. We had a very strong year. So these pullbacks, I think, are completely normal from a technical perspective, that is.
Well, we'll have to watch climate tech for September. Climate Week coming out in September. All right, guys, appreciate your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.